market continues to hold out. Even though yesterday, after that quiet start, we did take a knock and we did tumble a little bit. But having said that, we still managed to close above the 24,300 mark. And you know what? Both FIIs as well as DIIs were buyers in yesterday's session. In fact, the FII buying continues for a 6th straight session. So it's pretty much status quo, pretty much on that end. But yes, we did fall and we did recover as well. Net result, we closed in 0.5% lower, but it did get a little scary at one point in time, across the board pretty much.
Yeah, so Aisha, you got to ask yourself, is that what happened yesterday? Was it something which was a very scary kind of a market reaction? Well, not really, because the three pillars on which markets are rallying, I think they're still intact. Number one is global strength. We undermine the importance of global strength. I think global markets are in a fine fettle. Second is flow of institutional and domestic liquidity. That I think is intact. FIs are buying, DIs are surely investing. And third, I think, is the entire excitement about what this time's budget would be. So those three factors are intact. What we've seen yesterday, I think, is more like a routine profit booking. It could be largely because of price levels. It could be largely because of the messaging from the exchange that, look, there are about 1,000 stocks which no longer will qualify in terms of margin funding. So what you actually may see is that the leverage end of the market, and especially leverage end of the cash market, which may actually see some skimp from the top. But in my book, I think this market is nowhere close to what could be called as a euphoric peak. It's too early to jump and judge that the market will hit a pause button. I think it's too early to assume that we are in for a linear decline. What you may see, you may actually see the pace of price appreciation, and that magical price appreciation, especially which has happened in SME, small cap, mid cap and semi large cap, that may get arrested. Selected profit booking may kick in. Your earnings season will start today, and that's where I think the market reaction would be very, very visible right now. And the real test of the temperament would be when numbers are a miss, what happens? When numbers are a beat, what happens? And a classic point here is that look at the news from Mahindra & Mahindra. One price cut. Nothing changes in terms of EPS. But the market perceives as bad news, stock goes down. Maruti, good news, the stock goes up. So this market is going to be very exaggerated in terms of reaction. But I will not say yesterday's market action is end of the road. That's the bottom line.
Yeah. And I mean, the fact that, you are getting into such critical events, earnings, budget, etc. And for a market which is in any case, so top heavy, it's fine to get some skim off. I mean, not just budget, you've got the weekly expiry, you've got, US CPI data as well. A lot of important events now trickle in.
And, Aisha, earning expectations are not low.
Yeah,
this
exactly.
is not April, this is July. So you had a good quarter where you had monsoon on the right side, you had global flows on the right side, technically it's continuity in the government, you had rural recovery. So all those factors in a sense, and price points, so all those factors in a sense have ensured that the market expectations from the earnings season, I think, would be very high. So for me, out of all the factors which played out yesterday, I think that NSE unapproved 1,000 stocks. 1,000 stocks now, according to NSE, from 1st of August will not qualify as stocks where you can borrow or you can do cash leveraging. And that, I think, is the heart of a lot of activity in the market, especially at the HNI level, at the retail level. And that is where I think you may see a slowdown or you may see a mark come down. But that is not the end of the road. I think gradually earnings season will start taking center stage. And given that this is the first first budget of Modi 3.0, I guess expectations are reasonably high. So a pre-budget rally, earnings season and this entire NSE impact, these are the mix, so to speak, in the melting pot. These are the ingredients in the melting pot. But I'll say it again, I don't think you can say markets have topped out. Stay with the market, watch what you own, don't commit more, but don't be in a hurry to reduce your commitment also. Jo kar rahe ho, stay tight. Fasten your seat belts like this.
Yeah, and there's quite a few, important mid and small caps which are in that unapproved list. Aadhar Housing, 5paisa, Adani Power, Aarti Surfactants. Ajmera Realty, Atul Auto, Bharat Dynamics, and a slew of others as well, like a Go Fashion, HCC, Hoodco, Inox Wind, IRB Infra, etc. So pretty liquid names at that. But yes, what really took or rather stole the show yesterday was the auto discounts and the way the street reacted to them.
So Aisha, this is for the first time after COVID we've heard companies cutting costs, and they're cutting whether it is prices or whether it is a discount. I mean, it's directly indirectly the same. But this is not a function of why do you cut prices? You cut prices when you see there's a slowdown in demand or inventory levels are increasing. And this is pretty much across the board. So this is not a Mahindra and Mahindra phenomenon. We got the same kind of an indication from a Maruti that they are considering discount, and ditto when it comes to Hyundai. Which means that is there a sluggishness which has come in the car market? Car market in a sense is the biggest indicator of what the aspirational and the discretionary spend is. For a sector where till about 3 months ago there was a long waiting, and you were getting just amazing numbers month on month, this news may come as a surprise. Is this an indication that okay, auto has peaked out? Very early to say that, but this is something which was unexpected and which is something which nobody anticipated. You could blame it on high inflation, you could blame it on sluggishness in the economy which happened for the quarter gone by. So the real economy and what is happening in auto is not adding up, and that is where I think the market nervousness has kicked in. And the fact that it is pretty much like a sector phenomenon, that also implies that for the car space now, things are not in the fast lane. It's a gear down. I'm not saying the reverse gear. So if you are in that 6th gear, you've come to the 4th gear. Reverse nahi.
Yeah, because they were in the 6th gear as well. So even after yesterday's 6.5% fall, M&M is barely skimmed any sort of, froth from the top. Though M&M did clarify.
If you like this video, then like, share and subscribe to ET Now.